Hello and welcome back to the channel. In this series, you're going to see 25 days of trade analysis. I am calling it 25 days of Tradesmas. In this Tradesmas series, if you are going to be watching it, I highly suggest that you take the opportunity to be participating in the giveaway. I would love to give back to you guys in the YouTube world who have supported me and followed me. I am always very interactive in the trading floor community, but I know there's a ton of you who have followed me for a while who aren't in there, and I want to be able to give back to YouTube as well. So from the bottom of my heart, thank you very much for all of your guys' support here on my YouTube channel, and I am wishing you all the warmest of holidays, whatever holiday it is that you celebrate. I personally celebrate Christmas, so therefore I am doing the 25 days of Tradesmas. But whatever your holiday season is, I wish you and your family and loved ones a very warm and happy holiday season. With that being said, I am doing the giveaway here on my channel. So for every day that I do one of the Tradesmas videos, if you do any sort of interaction, if you like, comment, or subscribe, you will earn an entry to be able to qualify at the end on the 25th day to be part of the drawing that I am holding. I will draw a winner for the giveaway. I will announce the winner on the 26th of December. The prize will be to win a yearly subscription to the trading floor. So if you guys are interested in it, make sure that you are doing the likes, subscribe, and comments. Obviously, you cannot resubscribe over and over again, but don't worry. You will get 3 credit points towards that, but then every day following it, as long as you leave a like and you leave a comment, you'll get 2 additional entries for each of those. In addition to my giveaway, if you guys love giveaways, we are doing one on the Trading Floor YouTube channel as well. It's the same thing over there in order to enter as well, though it is interaction. So if you like, comment, and subscribe over there with that channel, you are going to be entered into a drawing at the end on the 25th as well. We will draw a name for somebody to win a $1,000 cash prize. You do have to have PayPal to accept this prize, so make sure that you can accept PayPal if you're going to go over there and enter into it. But I think that's a really nice prize. I think most people this time of year would love to have $1,000 extra. So make sure that you guys are also checking out the Tradesmas that we are doing on the trading floor. And there are lots of styles of trading happening over there on their Tradesmas. You will see all of our live streamers and our staff submitting videos. So if breakout trading isn't really your thing, or maybe my style isn't your thing, no worries. Go check out the Trading Floor's YouTube and make sure you are subscribing, and commenting for an opportunity to win $1,000 cash prize at the end. Okay guys, let's get into the video, and happy holidays. Hello and welcome to day 13 of Tradesmas. In today's video, we're going to be getting out of November, which was Strategy Wars month, where we were working in reverse chronological order, and we're actually going to get back into regular chronological order. We are still going backwards during this series, though, into the months of different months that I was trading, but I'm going to start getting into October's trades now. So October's trades were a little bit different because I wasn't in an actual competition, so I didn't trade as often, and I was doing some more swing style trading. I'll explain a little bit more to you guys what I did, but I definitely was doing more swing trading type of trades in September and October. So I did talk about this a little bit in, I think, a previous video, so if you guys been following along, I did mention that. But my life's just been kind of crazy. I have a lot going on. I was dealing with construction within my housing situation, and you guys will also see that because I actually have a whole new office set up and everything. So you guys will see all of that coming. But because of that, my everyday sit down trading life wasn't really possible to sit on the 1 minute the way I did with Strategy Wars in November. So in October and in September, I was looking for ways to still be able to trade and make the profits that I need. Because I didn't have the time or the setup that I'm traditionally used to using, I ended up having to do more swing trading stuff, which honestly was kind of cool to do, and it was different for me. It definitely pushed my comfort zone a little bit more holding trades, because I think by now, if you've been watching the series, you've realized that I do like to secure profits. So I was securing the trades, but I was learning how to give myself a little more of a buffer and not to trail so quickly or so closely. So that was definitely a learning experience for me, and it was a really interesting thing to do for me. It helped me a lot, push my boundaries as a trader. So that's just a little kind of tidbit there. Once you guys do get profitable and you're comfortable, I definitely think it's worth looking at pushing your boundaries a little bit and trying to like learn something that maybe you're not comfortable with yet, obviously be profitable first. Make sure that you're like securing a strategy or some sort of income that you can rely on first before you go and like switch it up or like add something additional to your skill set. But yeah, I'm actually pretty like happy that I did push myself during like August, September, and October to swing trade a little bit more while my life in general is just a little more busy on the like day-to-day basis where I couldn't day trade quite as much. It's just been interesting to see. So you guys will see that in the next few trades. So what I have here is a screenshot of October. So not a ton of trades in October because I was swing trading, and you guys can see the trade we're going to go over today was actually my big boy trade. So that was the 10K trade that I got, which was a 10R, and it was a swing trade that I held. And the other ones, honestly, were more just for me to kind of get back into the game of like, you can see during the 27th and I was in 17th, I was kind of going for my more typical reward, which is like the 1 to 2K typical reward that I look for. And I was doing more of that to try and prepare myself to switch my mindset from swing trading back to like more of an intraday trading because I knew I had strategy wars coming up. Just a side note, if you are in strategy wars, you can swing trade, but like it's just not my like typical thing to do. And I did want to kind of get back into it. I didn't want to go into the new year like not having done my regular strategy, my basic go-to strategy, which is more of the intraday style that you guys have been seeing. I didn't want to go that long without doing it. So I did want to spend at least November like doing that style again. So that way come January, I'm not taking that much time off from it. Anyhow, so this is what my month in October looked like. It's on the weekly, but that's just because it all fit in that week. I did not trade earlier in the month because I was waiting for this setup to happen on NAS. And I also did really well in September, which you guys will see that coming up too in the future videos. But I like more than doubled in September what I need to do. So I did take like an extra like week or so off in October. And then I was just waiting for the setup that I wanted in order to be able to swing trade it. So that's what you guys are going to see in the next few videos that were out of the strategy war stuff. So we're working backwards, but I'm going to go back in chronological order for the month of October. So we're going to be starting with this trade here on 10/13 that I took, and it was a 10R reward. So here we are on NASDAQ 100. I just want you to focus on this one here. Don't worry about this other trade. We'll go over that another day. But for this trade here, this is the initial markup and setup that I had. And I wanted you guys to just see what the overall market looked like on the 15-minute time frame, because this is where I was kind of forming my interest in looking for this. I was also looking at the 1 hour and the 4 hour. If you had looked at the market during those times, it was trending down. NASDAQ had actually been trending down pretty much like September into October. So there was definitely more of a bearish bias that I had formed. And you guys will hear about that in future videos as well when you see like how I analyze them on higher time frames. So just know that those videos are coming, and I already had a bearish bias for NASDAQ based off of the higher time frames. And when I mean higher, I'm talking about like the 4 hour time frame. What I was doing here on the 15-minute was waiting for that pullback to finish that had happened up in here. And I was waiting for the structure to start forming again so that way I could get in. So what we had was this previous zone here. The market did trend up. It did retrace a bit, which is fine. I was waiting for that retracement to finish. It did retrace up, and then we had this little consolidation zone of price. And then we had a super strong bearish candle that came down and it does come back up again into another little mini zone, starting to create new market structure, showing that there is bullish pressure now being brought in to the market, and it's not just pushing its way back up in that retracement. So this candle was actually my interest candle. I was very intrigued when I saw this really strong bullish candle come in and push out of this zone. I did not enter there at all. I wasn't that interested that I was willing to risk it all just yet, because I didn't know if it was just, a pullback in of the retracement that was happening. So I waited a little bit. The market comes up. It fails to make a new higher high. It retraces about 50% of this move, which if you guys know anything about fibs, you would know what I'm talking about there. I don't have a fib drawn out, and I don't usually draw them out. I just in my head mentally know like has at least 50% of that move or so been retraced. And if it's close to about a 50% retracement, then I know that it's probably done doing what it needs to do if it's going against trend. So like I said, I already knew there was a bearish bias. I had about a 50% retracement of a bearish pushdown. So this is against trend. I had about a 50% retracement of that. And then I was just waiting to see if I had an opportunity to get in. There is an opportunity here where if you guys are following the rules, you had a little mini zone, you have a bearish smiley face that does technically break out. And had I been in the market at this time, maybe I would have gotten that, and that potentially could have been an entry. I know some people would have put their stop loss above this zone, but in this case, that's not actually a good place to put it. It really should be above these wicks over here. Because you have a candle that's pretty strong here, you want to be covering some of that candle, and ideally about 50% of it if it hasn't actually been retraced yet. This is a little more intermediate, this trade, as far as why I took it, but I want to start including some of this content for those of you who are more intermediate to advanced and like walking you guys through my logic of placement of things. So if you're a newer trader and you're a little bit lost, don't worry about it too much. Just know that this was still a breakout trade technically. It was trading with trend. There were a little more considerations as to what I was looking for. But again, I was looking to stick with a very large trade here. So I wanted to make sure that I was really analyzing like everything possible. And that would have been entry one that you potentially could have gotten in if you were in the market at those times. I was not. That's super early for me still to be in the markets, and I wasn't there at that time. I was, however, in the market around this bearish smiley face and this bearish candle. So I had seen the market come back up, push up here, grab a little liquidity above this zone that we had formed, but still, again, failed to actually come above and make a new higher high and change market structure. So I was still okay with my bearish bias. So as you can see, then we come above. I actually like to see a little liquidity grab every now and then, especially near like market open times or like pre-market open times. I do appreciate a nice little liquidity grab because it usually helps me to be like, okay, the market's done playing their games now. Let's go in the right direction. So in this case, this is actually kind of reassuring to see around that time. And then to see a nice strong bearish candle with the smiley face print like that just kind of reassured me. But I want to show you guys a little bit closer up what this looks like. So switching to the 5-minute time frame. So now we're on NASDAQ 5-minute. So the 15-minute I showed you guys, this one, follow me here. The 15-minute I showed you guys what I was seeing and what I liked. But I wanted to get in on a better time frame, a better entry potentially to kind of limit any drawdown that I might have. So in this case, I dropped to the 5-minute time frame to try and refine my zone and refine the rejection that I was looking for off of this zone here. So you guys can actually even read my little notes I write, but that's what I'm looking for. So this zone is still here. I just kind of move it a little bit to refine it. And what I mean by that is like sometimes it's a little bit off depending on if you're marking on a higher time frame. So when you drop to your lower time frames, you can just adjust your zones to try and cover like whatever little candles or bodies you might have missed on the higher time frame. So I just kind of pull it to adjust it. That's why the prices might seem a little bit off here. That's just me refining the zone. And then what I will do is wait to see when it breaks from it. You can see a little bit closer up here and a little easier for you guys to see where the actual entry and break happens. So this bearish smiley face comes down, breaks out of this previous zone, and it closes as a bearish candle. And that is a good signal for me to say, okay, I'm ready to get in. This candle actually, because it's a 5-minute time frame, was like going back and forth. And I, again, in saying that I am a little bit more intermediate here with my trading than most people. So I do allow something called repainting on my indicator. So that means that sometimes the smiley face will appear or disappear if all the criteria is being met. And it doesn't mean that it's going to stick though. Like say the candle closes, it could disappear if the criteria isn't met at close of candle still. In this case, I did enter a little early, as you guys can see here, and I was pretty confident in this candle because of like everything else that I was seeing. And like I said, I knew I was going all along with trend. I wasn't really going against it. I was okay with that. So I do highly suggest that you use the higher time frame as your trend bias to help you guys figure out where the market's actually going, because I know a lot of people have a hard time and like you might see some bullish pressure here and think like, oh, well, the market's going up, I'm trending up. But you're really not. You never were trending up. You were just trending up to retest a zone for the market to grab the liquidity above it and then come down and to continue the trend. In this case, I was looking to trade with the overall trend to really grab that higher reward as I was looking to swing trade. And this was a really good area for me that I was interested in. So that was the logic behind it. I did use a much higher time frame, like I said, a 1 hour and a 4 hour time frame. As far as my bias, I'd already had that for a while at that point because I had been trading NASDAQ, which you will see in future videos as to why. And I used the 15-minute, which was this chart here that you're seeing, as far as like my interest to gauge it. And the 15-minute is something I'm very comfortable with. So I'm usually pretty comfortable with gauging the market on the 15-minute. That's just like a personal thing for me. And then I did drop to this 5-minute to try and refine my entry, get a better price on the trade. And that way I could ideally less drawdown, which you can see I actually had like no drawdown at all on this trade, which was very rare and awesome to see. But yes, this was a really good trade, a very clean trade for me. And the stop loss, I already kind of explained where I was putting that and shooting for. So you guys can see where the stop loss was placed. And then the take profit was using an area to the left that I had marked up. And you can see the trade does take a few days to play out. So on the 13th, I entered and it took until about the 20th. It might have even been the 21st where it actually closes and hits my take profit. So I did hold this for quite a while. That's how this trade played out. So that was day 13's trade. And hopefully that helped you a little bit. And I will see you tomorrow for day 14.